you have analyzed Facebook's IPO, just as you have so many others, and you have some ideas about whether, I should put it, people should buy the stock today, because that is the question on everybody's mind. What's the answer?
If you're getting shares at the offer price, Facebook will probably be a good deal, especially on the first day of trading. But I would not encourage people to be buying in the market, especially if it opens higher, as it very probably will. The evidence is that for people who buy an IPO in the market on the first day of trading or a week later, all you're going to get is, on average, a return equal to the market return. You're going to get more volatility with Facebook, but there's nothing special about it being a good opportunity for investors.
Jay, we know what you think is going to happen to the stock, and we're going to show everybody right now. You think it is going to have a first-day pop, but perhaps not an extraordinary pop, right? Only to 49 bucks.
Right. The historical pattern has been that IPOs that priced above the original file price range maximum, in Facebook's case, $28 to $35 a share, being priced at $38 a share. On average, over the last 11 years, companies like this have opened up 30% above the offer price. And that's how I come up with the $49 prediction.
Jay, I want to talk a bit more about the statistical analysis behind your expectations. As we know, averages can be dangerous things. How robust is the data set? How many companies, don't fall into that sort of one standard deviation, in the middle? Right.
About 25% of the companies that go public do price above the original file price maximum. So Facebook is in that upper quartile of companies in terms of expected first-day returns. But within that group, there's a lot of variation. Indeed, 5% of them actually start trading flat or down. So it's not a guaranteed thing by any means.
And do you think that the performance of some recent intranet IPOs, like Pandora, for example, or Groupon, bodes ill for Facebook in particular?
I don't think in particular. However, I do have concerns about the valuation of Facebook. With a $38 offer price, we're talking about a market value to sales ratio of 25, which is unprecedented for a company that's already got $4 billion in annual sales.
Jay, I want to ask you a question that we've been tossing around here this morning. Whether or not, I suppose, there was any need, in a sense, for Facebook to go public. Clearly, the company was able to raise some money doing so. But Facebook has been trading on secondary markets at a valuation not far from $100 billion for a while. What does that say about the need for companies to actually go public? And maybe does it raise some questions for you about the integrity of public markets going forward?
Well, in the private markets where Facebook has been getting traded, there's limited liquidity. In this offering, Facebook is raising in the vicinity of $18 billion. You don't have anywhere near that capital raising ability in the private markets, and in particular, the secondary market liquidity for investors who want to trade. Furthermore, with the lockup period restrictions, what Facebook is doing by going public, with the lockups where they've got the staggered lockups. Some of the shares are going to be released 91 days from now, others 181 days from now. A little over a year from now, there will be complete liquidity in the stock, something that was not there as long as it was not traded on an exchange.
Jay, you're clearly drawing an important distinction between a good investment and a good company, but give us your opinion. Is Facebook a good company?
Yes, it's growing incredibly rapidly. It's been incredibly successful. There's no question that it's got a business model that works.